Namaste, my dear friends. Referring to you now, continuation of special circumstances for availing the input tax credit. In this process, in the earlier session, we referred by discussing elaboratively the concept of section 18.1a, 18.1b, 18.1c and 18.1d. We understood. Along with 18.2. 18.2 talks about to avail the input tax credit, there must be time limit. The invoice on which you are going to claim input tax credit should not be older than 1 year from the date of invoice till the date of availing the input tax credit. So, in this process, now I am bringing to notice section 18, subsection 3. What this talks about? 18.3. As you are aware of that, in the case of amalgamation, in the case of merger, in the case of demerger, in the case of absorption, in the case of business constitution has been changed, where the transferor assets and liabilities will become the assets and liabilities of the transferee. Going concern going to continue with the other name, which is not a supply of goods. It is supply of service. If so, in that case, it is exempt supply of service. The transferor assets and liabilities will become the assets and liabilities of the transferee. In that case, the input tax credit receivable, what is there in the books of the transferor, will automatically become the input tax credit receivable of the transferee. How to understand this point? Presenting in a simplified manner for your kind consideration in this regard as follows. Assume a scenario, my dear friends. Here, the following are registered persons. The following are registered persons. Who are they? One by one. 1. Ram Limited is registered person. Thereafter, Rahim Limited is a registered person. Thereafter, Robert Limited is a registered person. 3 of them are registered persons. Now they are joining together. Formed RRR Limited in the name of amalgamation. A new company has been incorporated. New company is incorporated. If there is a case, in the given case, this new company, what is incorporated by Ram, Rahim, Robert, are basically registered persons. Their assets and liabilities will automatically assets and liabilities of a new business, new entity, RRR Limited. In that case, the ITC, input tax credit receivable, one of the asset under the current assets, will become assets and liabilities of a new company. Like that, transfer of entire business taken place, then the new entity RRR Limited eligible to avail ITC receivable of Ram Limited, Rahim Limited, Robert Limited will become the ITC receivable of a new company RRR Limited. This is what section 18 subsection 3 refers. Now the question arises, sir, what about in the case of a demerger? As you are aware of that, what do you mean by demerger? In the case of demerger, assume, look here, Mrs. RR Limited having two units. There are two units, Unit A and Unit B. Unit A in Andhra Pradesh, Unit B in Tamil Nadu. RR basically a registered person. They have assets. Let us say 60 lakh of rupees assets. They have here assets. Let us say 40 lakhs of rupees of assets. Now, Unit A, from that part has been transferred. 50% is assets transferred to a company called as AR Limited. AR Limited has been formed by taking from 50% of the assets of Unit A and 50 here, let us say 40% assets of particular Unit B transferred to a new entity in the name of new merger, in the name of demerger. Therefore, here this is a new entity. This entity is continuing the business, but the new entity has been formed under the demerger. In that case, when you transferring the assets, the unutilized input tax credit in Unit A transferred in that asset ratio basis to the new entity. Meaning here ITC receivable, ITC receivable how much is there? In the name of CGST 2 lakhs, HGST 1 lakh, IGST 7 lakh, totally 10 lakhs for Unit A. Unit B, ITC receivable, in that case CGST 4 lakh, thereafter HGST 2 lakhs, thereafter IGST, for example I am telling you my dear friends, 4 lakh, totally here 10 lakhs. So like that assets are there, have been receivable of ITC. Transferred 40% means out of here, out of this particular 10 lakhs, 40% can be transferred here, that is namely 4 lakhs. Here out of the 10 lakhs, 50% transferred, so transfer here 5 lakhs. Now one not required to transfer the CGST from that 40%, 50% like that, not required. Total credit receivable how much? That asset ratio transferred basis you transferred. I transferred 5 lakhs from Unit A, 4 lakhs from Unit B to AR Limited. Under the demerger, new unit has been incorporated. Now, you being a transferor, RRR Limited should submit Form ITC 02. Form ITC 02 you have to submit. While submitting it, you can decide which proportion of credit can be given. That means how much CGST, now transferred how much here? Transferring how much here? You transferring here almost 5 lakhs from Unit A. 5 lakhs from Unit A you transferring out of 10 lakhs of credit. If so, Unit A says, I will give CGST out of 5 lakhs. How much CGST here is there? 2 lakhs. So 2 lakhs I will transfer. Then here 2 lakhs will be transferred, balance amount 0. Thereafter SGST 1 lakh, 1 lakh I am transferring. Therefore SGST 1 lakh. The balance 7 lakhs is available IGST. Here in the given case IGST out of 7 lakhs required to transfer how much? 2 lakhs. So IGST I am transferring how much? 2 lakhs. Totally 5 lakhs transferred. transfer to whom? To the new unit. Like that I can decide in my ITC 02. That means the leftover ITC of IGST, how much here? They received here how much? 2 lakhs. Therefore, out of 7 lakh, 2 lakhs gone. Balance 5 lakhs only left over. That means unit A CGST 0, unit A SGST 0 after transferring the credit to new unit, and IGST out of 7 lakhs transferred 2 lakhs, balance 5 lakhs left over in the RR Limited A unit. Like that, the ITC out of 10 lakhs of receivable transferred 40%, namely 4 lakhs. This 4 lakhs you can decide. Out of CGST 4 lakhs, how much you transferred? Out of 2 lakhs of SGST, how much you transferred? You can decide. If I transfer entire amount of 4 lakhs from CGST, then CGST, if I transferred 4 lakhs, balance amount will become 0. That means SGST 2 lakhs, IGST 4 lakhs will be continuing in the unit B. Like that, you have to decide being a transferor in ITC 02. A form should be submitted. And you being a practicing cost accountant or being a practicing chartered accountant, certify this pattern of transferring of credit is as in accordance with section 18 subsection 3. Yes, it is with the best of knowledge verified. All the transfer of credit is in accordance with the provisions of section 18 subsection 3. Certification should be submitted by the transferor while uploading ITC 02 of transferring of credit to other units. This has been explained properly in the material itself, my dear sir. I have given explanation here. See, elaborately given. This is see RRR Limited followed by this transfer, asset ratio proportion transfer. Thereafter, I give elaborately comprehensive example here. Transferring of ITC. Got the clarity, my dear friends? Any doubt up to this, my dear friends? A transfer of credit only I referred. 18.3 in case of demerger, amalgamation, transfer or sale or business constitution has been changed. What do you mean the business constitution changed? Sole proprietor now became partnership firm. Partnership firm now became to private limited. Private limited now became to limited. Like that, if there is a change in the business constitution, the PAN number also will change. Therefore, registration is required. There is a transfer of assets liabilities, which is the supply of service, exempted nature of service. But the assets of this transferor, namely which includes ITC receivable, will become ITC receivable of the transferee. Like that, I explained this. Any doubt? So, no news, good news, huh? Empa? ஒண்ணுமே புரியலையா?
No doubt.
No doubt. Very good. So, moving on to the 18 subsection 4. 18 subsection 4. How to understand 18.4, which is entirely a new concept here from the discussion of earlier. 18.4 is exactly opposite to 18.1c, 18.1d. 18.1c here we said avail the input tax credit. 18.1d also avail the input tax credit, I said. Whereas coming to 18.4, so far normal taxpayer now wanted to go for composition scheme, opted the composition scheme. If you opt the composition scheme, are you eligible to avail the input tax credit, my dear friends? Obviously not. So far I am a taxable supplier of goods, services. But unfortunate, from today onwards, my supply became exempted nature. Is it so? Yes, sir. Then from today onwards, not eligible for input tax credit. How to understand 18.4 will be explained to you in a practical manner with the help of simplified example. Example with regard to section 18 subsection 4 of the CGST. Now in this case, dear friends, presenting here, assume a scenario. Here Mrs. X and company, he opted to pay I can say that normal tax payer, paying normal rate of tax. That means registered person paying the normal tax. So here what happened? This fellow in the financial year 24-25, his aggregate turnover rupees 55 lakhs. He is basically a trader having place of business Tamil Nadu. Normal taxpayer. Aggregate turnover of the financial year 55 lakhs, not exceeded 1 crore 50 lakhs. So in the current year, in the current financial year 25-26, he wants to willing to opt composition scheme, which is effective from 1st April 2025, because you have to intimate to opt the composition scheme. XN company should intimate form GST CMP 02 prior to the commencement of the succeeding financial year in which they want to go for composition scheme. The composition is applicable from 1st of April 2025 onwards applicable. If that is the case, you tell me, can you avail the input tax credit if you go for composition scheme? No. Therefore, the law says here, stock as on 31st March 2025, how much is there? Sir, stock value 1 lakh, sir. Then the GST thereon 18%, sir, 18,000. This 18,000 ITC availed and utilized as on availed and utilized in financial year 25-25, you have been availed and utilized. ITC are over. That means now ITC receivable is nil, because 18,000 you avail the ITC, utilize the ITC. Now the stock is still there. The stock as on 31st of March 2025, you are having the 1 lakh stock as such. The stock is not removed. The stock is remain with your organization, on which input tax credit not allowed, because from 1st of April the stock you are going to use to pay composition rates. So the stock on which ITC is not allowed, already availed and utilized. Now receivable nil. Then what shall we do to go for composition scheme? Section 18(4) says that, hey Mr. XN company, you have to pay you have to pay this amount of 18,000 input tax credit what you utilized already not allowed to you. Therefore, pay as an amount to department. Pay as an amount to department. Which one? 18,000. Sir, a case like that I can explain. Sir, out of 18,000, 10,000 utilized, sir. Balance 8,000 not utilized, sir. In that case, what is available for reversal is 8,000. Reverse it. What you availed means 10,000 you have to pay to department. A case I'm telling you, if you 18,000 out of which 10,000 is utilized, then 8,000 not utilized. That means the ITC reversible how much? ITC is not allowed how much? 18,000. Reverse ITC 8,000. Balance 10,000 unutilized. Pay amount to department. In case I'm telling you alternative manner. Sir, in the case where the ITC receivable is not nil, sir, ITC receivable is, let us say, instead of nil, it is rupees 20,000, sir. For example, it is there 20,000 available, sir, ITC receivable. In that case, ITC receivable 20,000, reversible 18,000. Reverse it. Balance excess of rupees 2,000 will lapse because from 1st of April 2025 onwards, you are going for composition scheme where not eligible for ITC. It is with regard to inputs. What about capital goods, sir? In case of capital goods, for example, you purchase the capital goods value for 10 lakhs. GST 18%, which is 1,80,000 is the GST. When you purchase the capital goods, sir, I purchase the capital goods on 1st July 2024 I purchase, sir. Very good. In the financial year 24-25 you purchase. Yes, sir. Is a financial year 24-25, sir. That time you are under normal rate of payment of tax. Therefore, 1,80,000 rupees ITC availed, sir. Very good. And utilized, sir. Also very good. That time eligible to avail. Now from 1st April 2025, since you are going for composition scheme, you are not eligible for composition scheme. If you are not eligible to go for composition scheme, then what is going to happen? ITC availed and utilized by you on that capital goods not allowed now. How much not allowed means proportionately. That means so far you use for normal payment of GST taxes eligible to ITC. From 1st April 2025 you are not eligible to avail ITC. In that case, the law here says that please refer rule number 44, sub-rule number 1, class B, which says that how many months you used this capital asset under the normal regular scheme. And also this rule number 44 declared life of CG. CG means capital goods is 5 years. 5 years nothing but 60 months. In that case, 5 years nothing but 60 months. In that case, 1,80,000 bifurcate in two parts. One is normal scheme. Now, composition scheme. When you purchase asset, sir, I purchase asset on 1st of July, sir. That means July, August, September, October, November, December, January, February, March. 9 months you use for normal things, normal tax paying purpose. Out of 60 months, 9 months is gone. Then 51 months under composition scheme, because from 1st April 2025 onwards, you are going for what? The composition scheme. So this you used for 9 months, even 9 months 1 day also, you can take 1 day also 1 month. That means 10 months will take place. If 8 months 1 day, 9 months, here exact 9 months, because you purchase on 1st of July, 1st of July, 1st of July, July, August, September, October, November, December, January, February, March. So almost all 9 months. For the 9 months you use for normal scheme, ITC allowed. Balance out of 60 months, 51 months you are going to use for composition scheme. ITC is not allowed. Therefore, in the given case, I will say that 1,80,000 into 9 months divided by 60 months. ITC already allowed, availed. How much? Tell me. 1,80,000 into 9 months divided by 60 months. Quickly, I want a response from you people. Huh?
27,000, sir.
87. Yes?
27, sir. 27, sir.
27,000. Okay. Then in the given case here, 1,80,000 on which 51 months divided by 60 months, the balance amount, how much comes? 1 lakh? How much comes? Huh?
4,53,000.
53. 1 lakh 53. Correct, Amma?
Yes,
Yes.
sir.
1,53,000. So here this much of ITC not allowed in case of capital goods, not allowed. This is already availed. ITC allowed, is allowed, but this is not allowed because you are going from 1st April 2025 onwards composition scheme. That means rule 44 sub number 1 class B, you have to invite when there is a normal scheme taxpayer going to opt composition scheme. In that case, this should be understood. For input goods, there is no much difficulty. Only you have to see input goods, how much is there lying in the organization, on which input tax credit not allowed. If already availed, pay the amount. Partly availed, partly not availed, reverse. The balance what you availed, utilized, you pay the amount back. No sir, excess credit is there sir. After reversal of my input tax credit on stock, that excess over and above credit available here, that will be lapse. Lapse means what? Debit to profit and loss account. As simple as this. So is the way in which this particular provision, section 18 subsection 4 runs, my dear friends. So much is there. Even it is fitting like this in the screen. ஒன்று கம்மி பண்ணும். Yes, இதான். Same pattern you can approach and apply even for exempted supply of goods. So far my supply is taxable supplies. From today exempt supply. From today exempt supply, I am not eligible to claim ITC because the blocked credit under section 17 subsection 5 of the GST. Therefore, exempt supplier of goods and services not eligible to claim ITC, that can be able to here considered as what we can call it not allowed ITC. If so far taxable, from today onwards exempted wholly. In that case, not eligible to avail ITC on inputs, not eligible to ITC on capital goods. Same pattern, the same pattern. Here I mentioned input goods, here I mentioned capital goods. Yes, my dear friends.
Yes.
Shall proceed? Any doubt you have specifically here? No doubt. Shall I proceed further? Yes.
Yes, sir.
Yes, sir.
Good, good. Now proceed furthermore, presenting 18.6. 18.6. Section 18, subsection 6. What this talks about? Supply of capital goods. I will explain with the help of simplified numeric example. That example gives more clarity than that of reading the provision. Referring section 18(6). What it is? Sir, basically I am a registered person, sir. Who am I? My name is Raj Limited, sir. Sir, basically I am a manufacturer, sir. Registered person GST, but I am also manufacturer. For example, manufacturer, example only. Manufacturing. Manufacture of what? Manufacture of taxable goods. So, I am producing finished goods, which is my output, which is taxable goods. To manufacture these taxable goods, I need capital goods. I need a machinery, which I purchase. When purchased on 1st August 23, 1st August 23, for rupees what value? Let us say 10 lakhs. GST 18%, 1.8 lakhs. Machinery purchase on 1st of August 2023 for rupees 10 lakhs, GST paid 18%, namely 1,80,000. I purchase the machinery. What for purchase the machinery? For producing finished goods, which is taxable output. So far, I have used machinery in my production. Now I want to upgrade it. I wanted to modernize my machinery. I want to have some AI tools, artificial intelligence features machinery. I want to have a more production, modernization of my production, upgradation of my production. Therefore, this machinery, what I was purchased, now I am selling off this machinery. Before selling, what I have did here is this 1,80,000 GST, ITC availed because I use for my production process of taxable output eligible for claiming input tax availed. Now what happened? This machine sold today on 15th September 2024. I sold it. At what price I sold? Let us say sold for 8 lakhs. Sold for 8 lakhs. 8 lakhs I sold. Then GST payable on such machinery 18%. 18% on 8 lakhs, how much comes, Amma? My dear friends, tell me, bro. Solunga, that machinery when I sold. This machinery, what I was purchased long back, now I sold today for 8 lakhs, 18%. How much?
144,220, sir.
1,44,000. That means 1,44,000 is a GST payable on output supply. Correct? In that case, sir, you tell me, being a CA or CMA professional, you tell me, my dear, if I purchase the machinery, what for they given the credit to me? They given the credit to me because I am going to produce taxable output supplies. Instead of producing that, after some time, if you sold it, ITC allowed, ITC not allowed. But the Raj Limited says, already I use this machinery quite for some period for my taxable output supply. Now only I am selling it. Therefore, full amount of ITC, how can you deny? Then the government said, no problem. This input tax credit, ITC on capital goods. How much you are telling here? 1,44,000. We will not go to dissolve fully. We will reduce. ITC allowed before reversal. How much ITC allowed means so far how many months, how many quarters you use this for this in the business. So 5% per quarter multiply with number of quarters. When you purchase it 1st of August, that means you purchase in the financial year 23-24, July, August, September, that quarter. Quarter means April to June, April to March, financial year, quarter, April, May, June, 1 quarter, July, August, September, 1 quarter. So you purchase in the 2nd quarter of the 23-24. So July, August, September, 1 quarter, 23. October, November, December, 2 quarters in the financial year 23-24. Thereafter, January, February, March. Thereafter, April, May, June. Thereafter, July, August, September. So 2 months, 15 days. Almost all 5 quarters. Even 1 day of the quarter also 1 quarter. So from their purchase, August month, July, August, September, 1 quarter. October, November, December, 1 quarter. January, February, March, another quarter. April, May, June, 1 quarter. Finally, July, August, September is 1 quarter, 5 quarters. For 5 quarters, how much percentage comes? 25%. Straight line method of deduction. So 1,44,000 into 25%. How much comes, Amma? That means it is allowed. 1,44,000 multiplied by 25%.
36,000.
36,000. Is clear?
Yes, sir.
Okay. The balance amount is not allowed. Amount to be paid. How much come here? To be paid to department. Paid means to be paid to department. How much? Balance amount will come here.
108,000.
108,000. This amount or GST on transaction value of sale. When they sold, no, here for 8 lakhs. 8 lakhs they sold. On 8 lakhs sold, on which 18%, you already got it here. 1,44,000. Among these two values, among to this A value, B value, whichever is higher. Therefore, rupees 1,44,000 ITC not allowed to this particular Raj Limited, since they sold the asset after using quite for some time in the business of taxable supply and further sold that machine. In that case, section 18 section 4 says that you have to pay the amount back to department. How much to pay? 1,44,000. ITC is not allowed. That much you have to pay to department. I can say that pay department. If you have credit, much credit, you can reverse the credit. Reverse or pay to department. With this, I can say that the explanation with regard to input tax credit chapter, relevant core area for the exam point of view is concluded, I can say.